What would you do if I handed you $100 right now? Spend it? Save it? Let it sit in your bank account slowly losing value? Most people never learn how to turn small amounts of money into something meaningful. School teaches algebra, but not how to grow $100 into 1,000, 10,000, or more. In this video, I'm going to walk you through 8 different ways to invest $100, starting from the safest possible option and moving all the way to extreme risk. And here's the twist. We're ranking them from risk level 1 to risk level 10. As risk increases, so does potential reward. I'm not a financial advisor. I'm just sharing practical strategies that have worked for real people, including myself. No courses, no upsells, just information. Let's start with the safest move possible. Risk level 1, high yield savings account. This isn't exciting, but it is smart. A high yield savings account is where your money earns interest while staying accessible. The real purpose here isn't growth, it's protection. Life happens. Car repairs, medical bills, broken appliances. If you don't have emergency savings, you borrow money. Borrowing money means interest. Interest means losing wealth. Your first $100 could be the beginning of your emergency fund. Look for 1. Competitive interest rate. 2. No monthly fees. 3. Easy withdrawals. This is your financial foundation. Risk level 2. Precious metals. Gold or silver. Now let's talk about preservation. Gold has been a store of value for thousands of years. When currencies weaken, gold often holds its purchasing power. But here's the important part. Gold doesn't produce income. It doesn't grow businesses. It just sits there. That's why it's slightly riskier than a savings account because of opportunity cost. If markets rise and gold stays flat, you miss growth. With $100, you could buy fractional gold online, invest in a gold-backed ETF, purchase silver instead for lower entry cost. Think of this as a hedge, not a growth engine. Risk level 3. Broad market index funds. Now we're stepping into real investing. An index fund spreads your money across hundreds of companies. Instead of picking one stock, you own a tiny piece of many. For example, companies in the S&P 500, global diversified funds. Historically, broad market indexes have averaged around 7 to 10% annually over long periods. Here's why this matters. If you invest $100 per month at 8% annually for 30 years, you could end up with over $135,000. That's compound growth. You don't need to predict the next big company. You just participate in overall economic growth. This is one of the most beginner-friendly ways to build wealth. Risk level 4. REITs, real estate investment trusts. Ever wanted to own property without buying a house? That's what REITs allow you to do. They pool investor money to buy income-generating properties like apartment complexes, office buildings, warehouses, shopping centers. By law, most REITs must distribute 90% of taxable income to shareholders. That means potential dividends. With $100, you can buy shares of a REIT ETF and start earning rental-style income without fixing toilets or managing tenants. It's real estate simplified. Risk level 5. Flipping items for profit. Now we move into entrepreneurship. Instead of investing in markets, you invest in deals. Buy low, sell higher. Examples: used electronics, collectibles, sneakers, niche hobby equipment, furniture. The advantage? You control the outcome more than with stocks. The risk? You might misjudge value. If you understand a specific niche, gaming gear, photography equipment, trading cards, your knowledge becomes your edge. This can turn $100 into $200 quickly, or sit unsold in your garage. Skill matters here.